Welcome to Chapter 3 of Applied Management Accounting. Today, we are going to explore one of the most practical and frequently tested topics in your AAT Level 4 examination: limiting factor analysis. Let me start with a simple scenario that will make this concept crystal clear. Imagine you run a bakery. You have popular recipes for 3 types of cakes: chocolate, vanilla, and red velvet. Each cake brings you a different profit margin, and each requires different amounts of ingredients and baking time. Now, imagine there is a flour shortage this week. You can only get half your usual supply. Suddenly, you cannot make as many cakes as you could sell. You have customers waiting, but not enough flour to satisfy everyone. Which cakes should you prioritize to make the most money? Your first instinct might be to say, make the most profitable cake. But here is the crucial insight, and it is the foundation of everything we will learn today. That intuitive answer is often wrong. This situation, where a scarce resource forces you to make difficult choices, is the essence of limiting factor analysis. In the real world, constraints are everywhere. A factory might have limited machine hours. A service company might have limited skilled staff. A manufacturer might face material shortages. A retailer might have limited shelf space or storage capacity. Even cash flow can be a limiting factor. The key question we need to answer is always the same. When we cannot do everything we want, what should we prioritize? By the end of this lecture, you will have a systematic method to answer this question every single time. Exam tip. The AAT examination will test your ability to calculate contribution per unit. Identify which resource is the limiting factor. Calculate contribution per unit of that scarce resource. Determine the optimal production plan, and calculate opportunity costs. Make sure you are comfortable with all 5 of these skills. Now let us look at why our intuition can lead us astray. This is one of the most common mistakes students make in the examination. So pay close attention. Consider 2 products. Product A has a contribution of £50 per unit, and Product B has a contribution of only £30 per unit. If someone asked you which product to prioritize, your instinct would say, Product A, right? It makes £20 more per unit. Seems obvious. But wait. Let us add one more piece of information. Product A requires 5 labor hours to make, while Product B requires only 1 labor hour. Now, what if labor hours are your scarce resource? Let us do the mathematics. Product A generates £50 divided by 5 hours, which equals £10 per labor hour. Product B generates £30 divided by 1 hour, which equals £30 per labor hour. Product B generates 3 times more contribution from each precious hour of labor. Think about what happens if you have 100 limited labor hours available. If you use all those hours to make Product A, you can make 100 divided by 5, which is 20 units. 20 units times £50 gives you £1,000 in total contribution. But if you use those same 100 hours to make Product B, you can make 100 units. 100 units times £30 gives you £3,000 in total contribution. That is 3 times more profit from the same scarce resource. This is the intuitive trap. When resources are unlimited, yes, focus on the highest contribution per unit. But when resources are scarce, you must focus on getting the most contribution from each unit of that scarce resource. Exam tip. If a question mentions any kind of resource constraint, whether it is labor hours, machine hours, materials, or anything else, you must calculate contribution per unit of the limiting factor. Simply ranking products by contribution per unit will almost certainly give you the wrong answer. This brings us to the golden rule of scarcity, and I want you to commit this to memory. When resources are limited, The goal is to maximize contribution per unit of the limiting factor, not contribution per unit of product. Let me say that again, because it is so important. Maximize contribution per unit of the limiting factor. This single shift in perspective is the key to unlocking maximum profitability under constraints. Think about it this way. If you only have a limited number of labor hours, you want each of those hours to generate as much contribution as possible. If you only have a limited amount of material, you want each kilogram or liter to generate as much contribution as possible. The product itself is not what matters. What matters is how efficiently each product uses your scarce resource. To apply this rule consistently and avoid mistakes under examination pressure, we use a simple 5-step system. This system will work for any limiting factor problem you encounter, whether in your studies or in real business situations. Let me introduce you to the ICRRA system. That is ICRRA. This is your 5-step framework for solving any limiting factor problem. I want you to memorize this acronym because it will guide you through every question in the examination. Step 1 is I for identify. You need to identify the scarce resource. This means comparing what resources you need to meet maximum demand against what resources you actually have available. The resource where your need exceeds your supply is your limiting factor. Step 2 is C for calculate. Calculate the contribution per unit for each product. Remember, contribution equals selling price minus variable costs. Make sure you exclude any fixed costs from this calculation. Step 3 is R for resource calculation. Calculate the contribution per unit of the scarce resource for each product. This is your contribution per unit divided by how much of the scarce resource each unit consumes. Step 4 is R for rank. Rank your products from highest to lowest based on their contribution per unit of scarce resource. The product with the highest rate gets first priority. The second highest gets second priority, and so on. Step 5 is A for allocate. Allocate your scarce resources based on the ranking. First, satisfy all demand for your rank 1 product, if you have enough resources. Then use whatever resources remain for your rank 2 product. Continue down the rankings until you run out of resources. ICRRA. Identify, calculate, resource, calculation, rank, allocate. This is a simple, repeatable process that ensures you always make the most profitable decision under pressure. Let us see how it works with a real example. Exam tip. Write ICRRA at the top of your working paper as soon as you see a limiting factor question. This will help you stay organized and ensure you do not miss any steps. Let us apply the ICRRA system to a real-world scenario. Gadget Co. manufactures 3 electronic products: Alpha, Beta, and Gamma. Here are the details for each product. Alpha sells for £120 per unit. Its direct materials cost £40. Direct labour costs £30. And variable overhead is £10. Each Alpha unit requires 3 labour hours to produce, and maximum demand is 400 units. Beta sells for £90 per unit. Direct materials are £35. Direct labour is £20, and variable overhead is £10. Each Beta requires 2 labour hours, with maximum demand of 600 units. Gamma sells for £75 per unit. Direct materials are £25. Direct labour is £15, and variable overhead is £10. Each Gamma needs 1.5 labour hours, and maximum demand is 800 units. Here is the constraint. Gadget Co. only has 2,000 labour hours available in this period. Fixed costs total £50,000. The goal is to determine the optimal production plan that maximizes profit. This is exactly the type of scenario you will face in your examination. We have multiple products, limited resources, And we need to decide how to allocate those resources for maximum profit. Let us work through this step by step using ICRRA. Let us begin with step 1. Identify the limiting factor. We need to calculate how many labor hours we would need to meet maximum demand for all products. For alpha, 400 units times 3 hours equals 1,200 hours. For beta, 600 units times 2 hours equals 1,200 hours. For gamma, 800 units times 1.5 hours equals 1,200 hours. Add these together. 1,200 plus 1,200 plus 1,200 equals 3,600 hours total. But we only have 2,000 hours available. We need 3,600 but have 2,000. That is a shortfall of 1,600 hours. Labor is definitely our limiting factor. Now step 2. Calculate contribution per unit. For alpha, we take the selling price of £120 and subtract all variable costs, £40 for materials, £30 for labor, and £10 for variable overhead. That gives us a contribution of £40 per unit. For beta, £90 minus 35 minus 20 minus 10 equals £25 contribution per unit. For gamma, £75 minus 25 minus 15 minus 10 also equals £25 contribution per unit. Looking at contribution per unit alone, alpha seems best at £40. Beta and gamma are tied at £25 each. But remember the intuitive trap. We cannot stop here. Step 3. Calculate contribution per labor hour. For alpha, £40 divided by 3 hours equals £13 and 33 pence per hour. For beta, £25 divided by 2 hours equals £12 and 50 pence per hour. For gamma, £25 divided by 1.5 hours equals £16 and 67 pence per hour. Notice what happened. Alpha had the highest contribution per unit at £40. But gamma generates the most contribution from each scarce hour of labor at £16.67. This is exactly why we calculate contribution per limiting factor. Exam tip: always show your workings clearly. Even if you make a calculation error, you can still earn method marks if the examiner can see you understood the process. Now we move to step 4. Rank the products. Based on contribution per labor hour, the ranking is clear. Gamma comes first, with £16.67 per hour. Alpha is second with £13.33 per hour. Beta is third with £12.50 per hour. Step 5 is where we allocate our 2,000 available labor hours based on this ranking. We start with our top-ranked product, gamma. Maximum demand is 800 units. Each unit needs 1.5 hours. So we need 800 times 1.5, which equals 1,200 hours to satisfy all gamma demand. We have 2,000 hours, so we can make all 800 gamma units. Hours remaining. 2,000 minus 1,200 equals 800 hours left. Next, we move to our second-ranked product, alpha. We have 800 hours remaining. Each alpha takes 3 hours. So we can make 800 divided by 3, which equals 266.67 units. But we cannot make a fraction of a unit, so we round down to 266 complete units. These 266 units use 266 times 3, which equals 798 hours. That leaves us with just 2 hours remaining. Finally, our third-ranked product, beta. We only have 2 hours left. Each beta takes 2 hours, so we can make exactly 1 unit of beta. Our optimal production plan is gamma, 800 units, alpha 266 units, beta 1 unit. Notice that we did not even come close to meeting demand for alpha or beta. We wanted 400 alphas but can only make 266. We wanted 600 betas but can only make 1. This is the reality of resource constraints. Exam tip: always round production quantities down to whole units. You cannot sell half a product. If your calculation gives you 200 to 66.67, the answer is 200 to 66. Now let us calculate the financial result of our optimal production plan. For gamma, 800 units times £25, contribution equals £20,000. For alpha, 266 units times £40 contribution equals £10,640. For beta, 1 unit times £25, contribution equals £25. Adding these together gives us a total contribution of £30,665. Now we subtract fixed costs to get our profit. £30,665 minus £50,000 in fixed costs equals a loss of £19,335. Yes, you heard that correctly. Even with our optimal plan, Gadget Co. makes a loss. But here is the crucial insight. This is the correct decision. Even though the company makes a loss, this production mix minimizes that loss. Any other production plan would result in an even larger loss. This is an important concept to understand. Optimal does not always mean profitable. Optimal means the best possible outcome given the constraints. When you are constrained by scarce resources, sometimes the best you can do is minimize your losses. If the examiner had asked you to calculate the maximum profit, and your answer is a loss, do not panic. As long as you have followed the ICRRA process correctly, your answer is right. The company simply does not have enough resources to cover its fixed costs. Exam tip: do not be surprised if your optimal production plan results in a loss. The question is asking for the best possible outcome, which may still be a loss if fixed costs are high relative to available production capacity. Now let us explore an important extension of limiting factor analysis: opportunity cost. The question we are answering here is, what is the maximum extra amount we would pay to get one more unit of our scarce resource? Think about the logic. In our Gadget Co. example, we could not make all the products we wanted because we ran out of labor hours. If we could get more labor hours, we would use them to make more products and generate more contribution. Currently, we have unsatisfied demand for both alpha and beta. We made 266 alphas out of 400 demanded, and only 1 beta out of 600 demanded. If we got more hours, what would we make? We would first make more alpha units until we meet the full demand of 400. Then we would make more beta units. Beta is our lowest ranked product with unsatisfied demand, and this is the key to calculating opportunity cost. The formula is straightforward. The maximum extra payment per unit of limiting factor equals the contribution per unit of limiting factor for the lowest ranked product that still has unsatisfied demand. In our case, beta has a contribution of £12.50 per labour hour. This means Gadget Co. should be willing to pay up to £12.50 per hour above the normal labour cost to get extra hours. Let us say normal labour costs £10 per hour. Gadget Co. should be willing to pay up to £10 plus £12.50, which equals £22.50 per hour for overtime or additional workers. Why? Because each extra hour generates £12.50 in additional contribution from making more beta units. As long as the extra cost is less than £12.50, the company is better off paying for those hours. Exam tip: when calculating opportunity cost, always use the lowest ranked product that has unsatisfied demand. Do not use the highest ranked product. This is a common mistake that costs students marks. Now, I want you to practice applying the ICRRA system with a different scenario. Let me introduce Fresh Bake Limited, an artisan bakery that produces 3 types of bread: sourdough, wholemeal, and rye. Sourdough sells for £4.50 per loaf. Variable costs total £2.25, giving a contribution of £2.25 per loaf. Maximum weekly demand is 500 loaves, and each loaf requires 0.4 kilograms of flour. Wholemeal sells for £3.80 per loaf. Variable costs are £1.70, giving a contribution of £2.10 per loaf. Maximum demand is 800 loaves, requiring 0.3 kilograms of flour each. Rye sells for £5 per loaf. Variable costs are £2.75, giving a contribution of £2.25 per loaf. Maximum demand is 300 loaves, requiring 0.5 kilograms of flour each. Here is the constraint. Fresh Bake only has 450 kilograms of flour available per week. Fixed costs are £800 per week. Before I show you the solution, pause the video if you can, and try to work through this yourself, using the ICRRA system. Confirm that flour is the limiting factor. Calculate contribution per loaf and per kilogram of flour. Rank the products. Determine the optimal production plan, and calculate the maximum weekly profit. Let us work through the Fresh Bake solution together. Step 1. Identify the limiting factor. Total flour needed. Sourdough, 500 times 0.4 equals 200 kilograms. Wholemeal, 800 times 0.3 equals 240 kilograms. Rye, 300 times 0.5 equals 150 kilograms. Total, 590 kilograms needed, but only 450 available. Flour is definitely the limiting factor. Step 2. Contribution per loaf. We already know these. Sourdough £2.25, wholemeal £2.10, rye £2.25. Sourdough and rye are tied for highest contribution per unit. Step 3. Contribution per kilogram of flour. Sourdough, £2.25 divided by 0.4 equals £5.62.5 per kilogram. Wholemeal, £2.10 divided by 0.3 equals £7 per kilogram. Rye, £2.25 divided by 0.5 equals £4.50 per kilogram. Step 4. Rank the products. First place goes to wholemeal at £7 per kilogram. Second place is sourdough at £5.62.5. Third place is rye at £4.50. Notice that wholemeal has the lowest contribution per loaf at £2.10, but it ranks first because it uses flour most efficiently. This perfectly illustrates why we must calculate contribution per limiting factor. Step 5. Allocate 450 kilograms of flour. Wholemeal first. 800 loaves times 0.3 kilograms equals 240 kilograms used. Remaining flour, 210 kilograms. Sourdough second. 500 loaves times 0.4 kilograms equals 200 kilograms used. Remaining flour, 10 kilograms. Rye third. 10 kilograms divided by 0.5 equals 20 loaves. Maximum profit calculation. Wholemeal, 800 times £2.10 equals £1,680. Sourdough, 500 times £2.25 equals £1,125. Rye, 20 times £2.25 equals £45. Total contribution, £2,850, less fixed costs of £800. Maximum profit, £2,050 per week. Before we finish, let me highlight 4 common examination traps that catch students out every year. Trap number 1. The ranking method. Many students rank products by contribution per unit. This is wrong. Always rank by contribution per unit of the limiting factor. A product with lower contribution per unit can still be your top priority if it uses the scarce resource more efficiently. Trap number 2. The cost calculation. When calculating contribution, only subtract variable costs. Never include fixed costs. Fixed costs are irrelevant for production mix decisions because they stay the same regardless of which products you make. Remember, contribution equals selling price minus variable costs only. Trap number 3. Production quantities. Never report fractional units in your production plan. You cannot make 266.67 products. Always round down to the nearest whole number. Even if your calculations give you a remainder, the answer is the whole number below. Trap number 4. Opportunity cost. When calculating opportunity cost, use the lowest ranked product that has unsatisfied demand. Many students mistakenly use the highest ranked product. Think about it. If you get more resources, you would make more of the products you could not fully supply. That means working your way up from the bottom of your ranking. Exam tip. Read the question carefully to identify exactly what is being asked. Is it asking for the production plan? The maximum profit? The opportunity cost? Each requires a slightly different final answer, even though the process is similar. Let me briefly cover 3 special scenarios you might encounter. Scenario 1. No maximum demand is given. Sometimes the question does not tell you the maximum demand for each product. In this case, assume you can sell unlimited quantities. Your strategy is to calculate contribution per limiting factor as usual, then use all available resources to produce only the highest ranked product. Do not make any of the lower ranked products at all. Scenario 2. No limiting factor exists. Sometimes when you check, you find that you have enough of every resource to meet maximum demand. In this case, there is no limiting factor problem. Simply produce and sell the maximum demand for all profitable products. You do not need to rank or allocate anything. Scenario 3. Multiple potential shortages. The data might show potential shortages in more than one resource, perhaps both labor and materials. In the AAT Level 4 examination, there will only ever be one true limiting factor. Calculate the shortage for each resource. The one that constrains you the most, often the one with the largest percentage shortage, is the only one you need to focus on for your production plan. These scenarios are less common than the standard limiting factor problem, but they do appear in examinations. Being prepared for them will give you confidence to handle whatever the examiner presents. Let us wrap up with your blueprint for optimal decisions under pressure. Remember the golden rule. When resources are scarce, always maximize contribution per unit of the limiting factor. This principle will guide you to the correct answer every time. And remember your 5-step system. ICRRA. I for identify. Is there a shortage and which resource? C for calculate. Contribution per unit, using selling price minus variable costs. R for resource calculation. Contribution, divided by scarce resource usage per unit. R for rank. Highest rate gets first priority. A for allocate. Build the production plan in rank order. Master this framework, and you will turn constraints into a competitive advantage by consistently making the most profitable choices. Whether you are facing an examination question or a real business decision, the process is the same. Before your examination, practice this process with different numbers and different scarce resources until it becomes automatic. The more you practice, the faster and more accurate you will become. Thank you for watching this lecture on limiting factor analysis. In your next study session, Work through the practice questions in your study guide to reinforce what you have learned today. Good luck with your examination preparation. And remember, contribution per limiting factor is the key to optimal decisions when resources are scarce.